Hope you had a good weekend. We are experiencing some turbulence in Bitcoin price, in Ethereum price. Thus, the day started in red, Asia started to sell off. And in that moment, when Bitcoin is at the bottom of the support line, Balancer is getting attacked. Balancer is a DeFi protocol where you can open pools and earn yield. You can earn fees from trading. $116 million were drained from Balancer. We will talk about this later. Then we will talk about South Park coin that was launched 2 days ago. And we also talk about Polymarket, PWEASE by the PM of this country. But first, as always, let's look at a little bit of technical analysis. Let's see what's happening with Bitcoin, Ethereum, and Solana. So Bitcoin, as always, we're still in the range. We are playing around, flirting with the support line. We touched it once, twice, and for the third time, we are flirting with it. It's not clear whether we're gonna break it or not. So far, it hasn't, because it hasn't happened, it's not going to happen until it happens. It might sound stupid and obvious, but the price at 107, it doesn't mean that it's going to go below to 105 and $100 and even lower than that. The current price is where the market found its equilibrium. So look at it that it's not necessarily going to break that support line. It hasn't broke it yet, and it's not going to unless it does. And because we are touching the support line more times, that's of course not a good sign. It makes the support line weaker, and after 3 touches, it's more likely to break out the support. But until that happens, we are just ranging. And it's important to look at fear and greed index. We were in the fear territory for the last since October 10th, since the biggest liquidation that happened thanks to Binance and thanks to their smart way of pricing collateral with the Ethena and not using the oracles. Since that moment, we're in fear, and it's not surprising because there is no. Everyone was expecting altseason, but it got canceled on October 10th. It got canceled, and it seems that today, with this huge exploit with the Balancer, we might be in the second inning, in the second wave of the negative news that might send fear and greed index lower into the, maybe even touch the extreme fear. Let's see how it's going to play out. But for now, just by looking at the index, you can see that we went lower, then we went a little bit high, not the same level high, and again a little bit lower. We can just do like basic analysis. This is reverse head and shoulders. So you can see this is first shoulder, this is second shoulder. I would not be surprised if we start going up from here, and the worst things would be already behind us. And just by looking at the gray line, which is the Bitcoin price, we are just at the bottom. And people get scared when price gets closer to the bottom because it looks like, oh, we're going down, even though it's scary. But that's when you need to be the contrarian, and in trading, it pays to be the contrarian. That's Bitcoin. Let's check Ethereum. Same. We have these weeks so far. We haven't broke them. The 3700 is still there. That's the level. The next one would be 2800, marked by from previous streams. Even though it's very depressing right now, and it seems like, okay, everyone is out, the CT is dead, and everyone is depressed. Things are not that bad. Bitcoin trades above 100K, Ethereum trades at 3700. Just this year, would you believe if I'll say that just this year it was trading at 1500? It's still super high, and the problem is everyone was overexposed in altcoins and got wiped out on October 10th if they were using leverage, and then people are getting losing their money trading meme coins. So that's why it felt like very rough. But if you have certain amount of money stashed in more safe strategies, maybe it's just locked in Bitcoin and locked in Aave, or locked in Ethereum and locked in Aave, and you're just borrowing against that, that would be, or maybe you're using some of the vaults like Hyperliquid Vault, where you can just earn money, or a GLP from Jupiter, where you can just earn money from the trading fees and not worry about where the direction of the market goes. It's just 10-20% per year stable. And a lot of people wanted to do that strategy with Balancer, and it got hacked, unfortunately. So that's Ethereum. Again, just bouncing on the support line, even though this it's not engulfing, but its big body candle looks scary. And there is actually a pattern in trading with you have one bearish candle, 3 green ones that do not go higher than. However, we don't know how this day gonna play out, and this might be just a week. This might be just 1, 2, 3, 4. This might be 5th week for the for today, because usually on what I feel that when there is a breakout, we just get a big candle, big price movement, kind of like what we had on October 10th. You see, we were right here and we just wicked out down, and it was quick, fast. And then we open the chart, you already see like the price hanging out outside of the range. And right now we haven't left the range, and that's why I'm not on the price going down. Solana is a little bit more aggressive than, you can see how we go down the risk curve or up the risk curve, because we're increasing our risk. And from Bitcoin to Ethereum to Solana, and Solana seems to be at the end of the previous weeks already, so even closer to the breakout, but still hasn't broke out yet. And maybe when the US market will wake up, we will have that drastic big move down, but so far it hasn't happened yet. And we also can look at the liquidation heat map to see if there was any liquidity built up, but we're not going to do it now because this is not about technical analysis. We're going to talk more about what's been happening last week and how we are starting this week. $116 million left Balancer. What is Balancer? DeFi protocol where you can create custom pools. In the other protocols that Balancer is similar to is Uniswap and Curve. However, on Uniswap, you can only create equal pools 50-50. The innovation in Balancer was that you can create weighted pools, let's for example 70-30 or 80-20, and that helps you to avoid impermanent loss. You're earning money in fees, but then the assets that you deposited into the pool might be losing value. And if you have weighted pool, then for example 80-20, and then you chose the 20 be more risky asset, and that started to go in value, you're not losing that much because again it's weighted, so you're less exposed to the loss of that asset. So that was Balancer. They started a while ago. It's coming from back in 2020, at least that's when DeFi Llama goes as far. This shows you how much total value locked in Balancer, and the peak was in 2020 at the peak of the DeFi craze, and since then it's been dropping. It's always important to look at these charts for TVL in the native token. In this case it's Ethereum, because if we look just in USD value, there will be too much fluctuation because people lock Ethereum in that protocol. So we switched to Ethereum 2 years ago in 2023. There were already 2 exploits, 2 hacks, but only 500,000 and 600,000 were stolen from those hacks. And you can see that it didn't affect much total value locked. However, it caused a downtrend and people started to withdraw money slowly. It's been trending on the downside for sure. The last reading of the TVL for Balancer was 678 million. So imagine out of 678 million, 116 were lost right now and stolen, which is roughly 17% of the TVL. Like Balancer hasn't experienced anything like that, and it's going to be a big blow to the protocol and to the DeFi system in general, because we have all these events. We have the liquidation event for the traders. Okay, so that's the traders, and other people in crypto might say, okay, who cares? They're just gamblers. We are doing very safe things here. We are doing stable coins on this DeFi protocol, and the only risks we have is some exploit, but this is an old protocol and everything was already tried and it's very strong. However, those risks are still there, and look what's happening with 2025. The protocol is 65 years old and there is still exploits available. It just shows you how in crypto you can lose money in so many ways. Your wallet can be drained, you deposit it into the exchange and your key is not your crypto. if it's centralized exchange, and the exchange goes belly up in the case of FTX. And then there are protocols, there's Terra Luna, and Balancer is another example how risky crypto is, and still a lot of these strategies are very risky. So you need to adjust, and your yield or whatever strategy you're trying to achieve need to take consideration the risks that also present in that strategy. Balancer also had token, or they still have a token, and that is a governance token, BAL, and of course it's dropping now. So the attack started to happen at 1 a.m. Pacific time, 4 p.m. in West Coast. So of course everyone is sleeping in US, and the people haven't woken up yet to those news, and it started to drop. So it dropped 9%, and I would not be surprised if 6 a.m. when people start waking up, we're gonna find Balancer might be very, very low. Definitely filling in this week. If we zoom out, these previous lows were just in April 2025. So we're definitely gonna visit those lows. That's another 14% from here. One of the main assets that were drained were WETH, OSETH, and WSTETH. So those are wrapped tokens that you receive when you stake your ETH somewhere, and then you receive those staked tokens, and then you can restake them one more time. That was the most popular strategy on Balancer, was these weighted pools with those wrapped ETH and OSETH and WSTETH. How the exploit was conducted, it was conducted using flash loans. Flash loans are uncollateralized. They need to be paid in the same block on the blockchain. So they're very fast. It's not something manual. It's not like you go and you receive the loan, for example, like you do on Aave. It's all programmatically. The reason why they are uncollateralized is because they need to be returned on the same block. So it's very quick. And this exploit is popular when people try to hack DeFi, is they borrow these flash loans, and then they interact with the vulnerable Balancer V2 liquidity pool, the one that involves ETH variants like WSTETH and OSETH. The faulty check fails to properly verify the post-transaction state. This lets the attacker overdraw the pool by simulating inflated balances, draining more assets than deposited. It's similar to past AMM exploits, like in 2020 Balancer incident with the deflationary tokens, but amplified here by cross-chain V2 forks. So since 2020, Balancer implemented this version 2 pools, and unfortunately they were cross-chain, and it's an open source V2, so other chains could connect to Balancer. And for other chains, it's beneficial because now they can have the additional liquidity that people deposit into Balancer to run their strategies. But other chains connected to Balancer through their V2 pools, that increased the hack assets that were stolen, because they were also stolen from different chains. But the main chain, of course, was Ethereum. That would be like more than 90% of the tokens were stolen from Ethereum, because they were those wrapped ETH tokens. The stolen assets, primarily ETH-wrapped tokens, are swapped or bridged to the attacker's wallet in the same transaction. The flash loan is repaid using a portion of the profits, leaving the net gain, 116 million so far, in attackers' control. So they borrowed money, they deposited to the pool, they do some exploit, the faulty check fails to properly verify the post-transaction state, and then they take the money out. The pool didn't correctly price the assets that were deposited, and the attacker is able to remove more money than they deposited. They pay back the loan, and then they profit. And if they they did it in a way that they profited $116 million, which is again 17% of the total value locked in the protocol. As I was researching this, how the attack was happening, I also found out that there is Nexus Mutual, which is an insurance for those people who run those DeFi strategies. And if you buy this insurance, you can secure the money that you deposited into the protocol. Now, this is separate from Balancer. It's a third-party protocol, and it's just like insurance on chain, where they also have their coin, and you need to pay premiums for your insurance. And if you were pricing in those risks and you bought this insurance, then you will be able to recover your money because the insurance will pay for you. But I also researched, and Nexus Mutual has roughly 97% and 95% of the DeFi insurance market. However, out of all the people, it's still very early and not many people use insurance for their as part of their DeFi strategy. So probably no more than 5 to 10% of the stolen money will be recovered through the insurance. So Nexus Mutual is a leading independent DeFi insurance protocol. They have 200 to 400 million total value locked, where members of the pool have an XM token to cover smart contract risks like hacks. It's popular among DeFi whales, but niche due to KYC. So unfortunately, you need to do KYC with Nexus Mutual. Less than 1% of DeFi users are insured, and roughly 5 to 10% of victims will have Nexus coverage. Claims are community voted. So if something happened, the money was stolen, then you need to go in and you need to vote with your NXM token and say, hey, I actually lost this money and I would like to get the payout from this big pool. Out of 116 mil, maybe just a fraction will be recovered through those strategies of basically just making sure that you insure your DeFi strategy. Well, another thing, what's happening right now is Polymarket is everywhere on the news. They just raised at 10 billion valuation. So they have all this money. So now a lot of money coming into the marketing. Polymarket competes with Kalshi. Both of them are prediction markets, and more markets are being created. And one of the markets that is popular right now is whether a person going to say certain words or not. So Coinbase had a earnings call, and there were a bunch of markets created for whether Brian Armstrong, the CEO of Coinbase, will pronounce certain words. Because there are a bunch of earning calls happening right now, you can see that these markets were created for Snowflake, for Amazon, for Dell.
I was a little distracted because I was tracking the prediction market about what Coinbase will say on their next earnings call. And I just want to, add here the words Bitcoin, Ethereum, blockchain, staking, and Web3 to make sure we get those in before the end of the call.
Yeah, so you can...
All right, well, we've taken all of our questions. That's it for today. Thank you.
You can see how it wasn't a troll. It's just everyone is aware of these prediction markets now, and the links are being sent to those people, and it's so easy for them to just try, just do something with it. Another aspect, another news with that related to that was Sam Altman saying he was on TBPN.
Don't worry about the ticker. I don't think we're including. I don't think any of
different every few days. Man, I'm watching this Polymarket ticker go by, and it's so tempting to say things to.
Yeah. To be clear.
So he decided not to say those words, but again, everyone is watching it real life, and those are not some those are tech entrepreneurs, so they are more free with what they can do, and they are not just saying what the PR team told them. They have personalities. They are founders, both Sam Altman and Brian Armstrong. Those are not some CEOs that were appointed by the board with MBAs. They know that there are people out there waiting, just like people bet on sport events and expect their team to win. People do trade now these prediction markets, whether people gonna say or certain things or not. There was nothing new invented in the technology of the prediction markets. Like, you had sport betting before, and then you also could bet on whether there will be certain temperature, and you can buy some contracts based on that. And actually, the second biggest competitor to Polymarket is Kalshi. And the difference between Polymarket and Kalshi is Kalshi doesn't have a blockchain. So in Polymarket, you have everything is on chain, the events get resolved, and the payouts are being sent, and you trade against other people. So you deposit money, and someone else deposit money for yes, that you deposit money for no, and then you trade against each other. On Kalshi, you trade against Kalshi as a platform, and the markets, my understanding, they are created by the Kalshi themselves, and they are actually registered with the CFTC to provide those contracts, because at the end of the day, those are derivatives, those are contracts that you can trade. In general, these prediction markets, they existed, And right now there is a lot of marketing and attention going into the Polymarket. However, I think it's a little bit exaggerated, and because there is, in my opinion, there was no new technology or breakthrough technology or a platform being built. As a product, it's amazing. It's very interesting to interact with, but only if you enjoy this predicting certain events. Like, will he say this or will he say not? Will he not say this? You're not gonna have a windfall of winnings, because most of the time people try to stay safe on the safe side. That's another aspect of prediction market, is that we're not gonna hear stories of someone making millions of dollars on Polymarket unless they do it for a living. For example, in Memecoins, we had those events because you look at the chart and you can see, oh, if someone entered here, if someone tweeted at this point, or maybe they made a call in their community, in their Telegram or Discord, in a Discord servers, and then they exited at this point. So you can see how they made 100x, 200x. With prediction markets, that doesn't exist unless you bet on something very, very rare, something like Jesus coming in 2025 and it's December 31st. So the chances of Jesus coming are like 1 millionth, and he still comes in and then you win. So unless you can, of course, there is a strategy of just choosing those very, very rare events, but just putting very small amount of it, maybe cents, and then something will come out and maybe it will play out, but you need to choose so many of them. But people also have now an incentive to watch those earning calls, and imagine if the earning calls will become like games, the NFL and NBA games, where people have not only they are listening for the information, maybe you want to know what's next strategy for Coinbase, but you also invested into what they're gonna say. And there is a very big chance that Coinbase, as an exchange, they will introduce some form of the prediction markets, and will allow prediction markets to be traded on the exchange. Maybe they already started. I haven't researched on that topic. But the fact that Brian Armstrong, he interacts with this product, that's already hints that they're at least looking into that direction. Another thing that happened is South Park episode came out where they launched Memecoin. Let's watch it. I'm going to narrate to avoid copyright claim, but they're launching a token and their advisor from East Coast telling them that coin already reached over 100 grand in volume before liquidity even locked. Look at that. Look at that presentation that they did. Is how many times you've seen this allocation map. They even put that. It resembles the rainbow chart being shown for Bitcoin, the price movement, and like the rainbow chart where everything goes. That's immediately what I thought when I saw this. Kyle really doubts that they don't even need to spend any money, and advisors tells them that you don't need to do anything. You're the one who launched the token, so you just collect the profit. And then Stan says that it's not just a token, it's a movement. And advisor picks that up and says, yeah, give me more of that.
That's really good. Yeah, that's perfect.
Yeah, this guy looks awfully a lot like Sam Bankman-Fried. So they aired this episode, and the name of the token was South Park Sucks. The ticker is SPSN. Immediately it went 7 mil. It had very clean range after that. Unfortunately, it broke down. This looks a lot like Ethereum chart right now, right? With 1, 2, 3, 4, and then fifth touch was the one that broke it. And that's what I'm talking about. When the range is lost, usually it's lost very abruptly in a one candle. And you can see that like this candle, it went down immediately. So when you would open this chart, and this is 15 minutes chart, so each candle is 15 minutes, the price would be already out of the range. And unfortunately, this coin, I think, had all the potential. There are 6,000 holders of it, had all the potential to go much higher, because South Park, it's a mainstream thing, and the degen, the people who watch South Park, I think there is a big overlap. A lot of people who trade meme coins, 25-year-old, 30-year-old, 35-year-olds, they grow up watching South Park, and it's such a big cultural thing, because for them, they need to make jokes that are relevant to their audience. And somehow they decided that, okay, meme coins is something that people engaged with. The number of people is big enough to people to relate to this joke, because it wasn't like just in the passing when they mentioned it, right? They had a full segment about it. Unfortunately, token went down in price. It's very good memetics behind this South Park sucks coin, because it's already a cartoon, so that means you can have animated characters, and you can have the NFT collection based on the South Park. And you have the physical people who are creators of South Park. So whoever can control the supply of the South Park Sucks coin, they can be sending that coin to the creators. They can be trying to draw some attention somehow to asking for the creators to make an update maybe in the second episode about this coin. All of those dynamics, they are possible, and I think there is a potential in this coin. However, it did drop already from 4 mil to 1 mil. There was a Halloween this last week. JD Vance, second most important person, he posted this picture in a wig, which is the same image that's used by the PWEASE meme. This is the PWEASE meme. It's same, just a little bit chubbier cheeks. I like PWEASE Memecoin a lot. Coin that was launched by the president. It was a celebrity coin. And all celebrity coins, they are scam. They are the worst version of the meme coins, because all the supply is already locked by the insiders. It's already distributed to the insiders, to the inner circle. And then when it's launched, of course, it dropped. First it pumped, then it dropped, and it's not going anywhere now. However, the PWEASE meme was launched organically. There was a meme after he was talking with Zelensky, after the president was talking with Zelensky. JD added that to the Zelensky, he said, "You have to say please," referring to the Ukraine-US politics and how the money are being sent to the Ukraine to help Ukraine. So he said, "You have to say please at least once." And people created this meme of JD being a little boy. That is the best example of how a meme can form. It's organic, it's funny to some people, but there is humor in it. Like, it might not be funny to you, but you can understand what's the humor behind it. It was not launched by the people. It wasn't launched by JD. It was launched by the people, and people start buying it. And because of that picture that he posted, the token shot up 115%, basically 2x. And corrected down already.